Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario on the 4-hour chart, where we are looking for an impulsive structure to the upside, where usually the minimum target for wave 3 is the 1.618 trend-based fib extension taken from the low to the high of 1 to the lowest point here of wave 2, giving you a target at 50.5k. Quite an interesting area because just above we have some additional resistance, the blue box here sitting between 50.7k and 50.9k. In this scenario, we then expect a wave 4 sideways corrective structure, after which we expect one more push towards the upside in a wave 5. Now, a wave 3 can extend to much higher prices, so we don't really know when a wave 4 starts, only when we get a range that is quite similar in the length of time of this wave 2 over here. What is important, however, is the 0.618 on my chart, taken from the lowest point here of the range to the high that we have at the moment. If we are looking for a wave 4 and eventually one more high in a wave 5, you do not want to see the 0.618 hit. This is an invalidation for a wave 4. So in this case, what we want to see is a wave 3 to the upside, a good decent size range similar to at least wave 2 before another move towards the upside without hitting the 0.618 in this bullish scenario. In the bearish scenario, you do want to hit that 618 because you're looking for an ABC, and instead of a wave 4 and another move to the upside in a wave 5, you're looking for continuation to hit the 0.618, increasing the probabilities for price to move towards the downside. The most common target for a wave C is between the 1 and the 1.618 here, taken from the low to the high of A to the end of wave B. Most common target out of these fibs is the 1 to the 1.236, which is where we are at the moment. The 1.618 is orange because it is a little less common. Now the 1.618 is at 51k and the 1.236 above price is at 48.9k, which of course is very close to the high that we have at 49.1k as well. Something that we have to keep in mind is that the 886 here has been passed on the 4-hour chart. We hit it here for the first time, which means probabilities generally are higher to take this high. Even if you would get a move towards the downside, then the probabilities are higher. It's a wave C or a wave Y, because the 886 touch is a rare target for a wave 2 in an impulse to the downside, and it is a common target for a wave B or a wave X, increasing probabilities any move down is a C or Y to come back up later. So therefore, generally, on the 4-hour time frame, probabilities are high to take this high sooner or later. However, locally, we hit the 886, bit of a rejection, but now we came back up. If you hit the 886 for the second time and also closing candles above, it increases the probabilities to take the high without any bigger moves towards the downside. More locally, in both a potential wave 3 to the upside as well as a wave C, we are preferably looking for higher prices. And the main reason that we are looking for still at least one more high is because of the volume. If we look at the latest move here towards the upside, then you can see that the highest amount of volume is in the last candle towards the upside, and that is not what you want to see. If we are looking for a wave 5 to the upside, a wave 5 should be an impulsive structure. So what we are then looking for is a wave 1, 2, 3, 4 and a wave 5. By far most common is the highest amount of volume in a wave 3, low volume in a wave 4, and then another high to the upside on lower volume compared to wave 3. But that is not the case over here at the moment, as price is moving to the upside with increasing volume. So what we want to see for an impulse is at least another wave 4 before another 5 towards the upside. However, if we are looking for a bearish scenario here, then we could be looking for a flat structure in an A, B, and then a wave C, ending around the 38205 area before then continuation to the upside, because the fact that price here then ends on high volume and starts to move to the downside increases the probabilities that sooner or later price will also take this high over here. And if we then do talk about that flat structure, then this is what we are looking for. 3-wave structure in A, corrective structure towards the upside in a wave wave B, where corrective structures do like to end on high volume as well. So it's definitely not a guarantee for an impulse. This can also be the high of a corrective structure, where in the weekend we are going to continue this range over here and move down for a wave C, preferably then taking the low of this wave A here. And the most common target for wave B has been hit. Now you also see the 0.618 on my chart. This one is also important because if we are looking for an impulse towards the upside, right, then the highest amount of volume is in this move to the upside. And as just explained, usually the highest amount of volume is in a wave 3. So therefore the ranges before the move with the highest volume are generally regarded as wave 2s. Then you get the highest amount of volume in a wave 3, and then you expect a couple of 4-5s. Now this move to the upside, of course, is very shallow for the size of this range over here, so that's something to note. Also, if these are wave 2s and this is the most recent wave 2, and we then get a 3, 4 and a 5, you can see there's overlap between the high over here and the low, which is not really what you want to see. And I also put the 0.618 on my chart, taken from the low to the high. Hitting this 618 over here also increases the probabilities a bit to look for a continuation of the weekend range. Preferably, if we are looking for a wave C, we are going to be looking for an impulsive structure to the downside in a 1, 2, 3, 4, 5, where all the rules of an impulse should be respected as well. And it would be nice to see some bearish CVD divergences as well. If we zoom out to the monthly time frame, then over here you can see there is a monthly gap that I have on the chart. Touched once, moved to the downside, touched twice, bit of a range on the daily time frame. And now we touch this gap for the third time, as you can see, increasing the probabilities for price to move towards the upside to 53.3k to fill this gap. Also on the weekly time frame, we had an interesting gap over here. Now, of course, we already covered this, but I think it's interesting with regards to the monthly gap that is not yet filled, that you see an example of what can happen. Here, price was ranging, right, for a little bit, and we had a weekly gap here as well. Weekly candle, bit of a push, and then the low over here and the high were not connected, so we had a bit of a gap on the weekly time frame. Price moved into this gap, moved to the other side, 38.5k, and then pushed towards the upside where we are at the moment. When we look at the CVD divergences, we had a bit of bullish CVD divergences here, higher low in price, lower low on the CVD, which already played out because price here took the high. More locally, however, we have some bearish CVD divergences. The little one here already played out, lower high on price, higher high on the CVD, and as price was retracing here towards the upside, created some more bearish CVD divergences, which can be seen over here as well, right? The small bearish CVD is seen here, lower high on price, higher high on the CVD, and now we have with the red candle, right, that created the high, lower high on price, but look at the yellow line. This is the CVD of the high that we have of the red candle. You can see the yellow dotted line is just above, so that is a bearish CVD that we have here on the chart as well. And if we then look at the probabilities of the different scenarios, then on the low time frame, the 4-hour chart, the probabilities are higher for price to take this high. If we look at the micro, which is the structure over here, probabilities are also higher to still make another high, just because of this move ending on the highest amount of volume. If we do move towards the downside and continue the weekend range, then the probabilities are higher that this is a corrective high instead of an impulsive high, which means probabilities are higher to then come back up at a later stage to take the high that we have over here. And more locally, we are looking for price to continue the range, which is most common during the weekend as well, as usually in weekends we have sideways corrective structures. Now keep an eye on the 0.618 that I showed earlier as well, as it does increase some probabilities for a flat and a continuation of the range as well. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.